Hello, everybody, and welcome to Confessions of a Market Maker, Market Recap Edition. I'm your co-host, Ray, aka the White Wesley Snipes, and I'm joined here. I'm joined here by my beloved co-host, JJ, aka the Postman. He always delivers, and we're here to recap the market and the news surrounding the week of November 11th through the 15th. JJ, how was your trading week?
It was good. Had to take your time and wait for them to develop, but so far so good. Did okay.
Yeah, no, I feel like I've been saying this the past couple of weeks, but man, this slow price action is really testing some patience, huh?
It is. And that, they've got the shorts in a meat grinder and this thing's just grinding higher and higher and higher. And it's, I just, sometimes I look at it and I go, oh my God, I hope they covered. And then, then you see it go higher, then you're like, oh God, they didn't cover. And it's just, being an old short seller myself, I feel bad for the people who are trapped in this thing, but it's just, there's just no sign of any kind of natural selling in this market until I guess they figure out where they're taking it.
Mm-hmm.
And it's a little, sometimes it's a bit painful to watch because I know people are trapped short and it's just grinding them higher and higher and higher. And sometimes, if you're squeamish, it's not good.
I mean, it's all-time highs are just a regular occurrence nowadays. So tell us about the market's behavior this week.
Well, I mean, the Wall Street Journal says the Dow topped 28,000 for the first time. I still remember when it crossed 10, and I'm not that old, for God's sakes. And they call it a furious rally in the final minutes of the trading session. So, it's so funny how they run up price on a Friday and, they bring out old Johnny Uptick to mark up the, the session and close it at the high of the day. So I don't know. I've been watching this market and I thank God for Jim Dalton, really, because there is no way, today he was in our room and we just were so grateful because before this, I would have never known how to trade today. I would have been completely offside or just spinning around. And this way, he showed us how to see a market. And I know it sounds like I'm touting him, but I'm just so grateful that I'm actually able to see trades using, the insight that he taught us. And it just makes such a difference to not be able to, to get caught up in bad trade location when you're short, which is one of the most painful things. It just gets ground against you.
Shout out to the Oracle,
yeah,
Jim
exactly.
Dalton. So Jay, what type of adjustments to our strategy do you think we should be making given current conditions?
Definitely the strategy of patience, because I've noticed really like the price action has been ungodly slow. So it takes a while for the structure to reveal itself. And then once it does, you can get in there and pull off a few trades. Today, it was funny because I actually traded right off the get-go when I saw it was so technical and Jim was speaking in our webinar, and I usually never trade short off the open. That's really not something I do. And I just saw it and I just took it so effortlessly. It just seemed like it kind of flowed out of me. I think it's because he calmed me down so much. When he was talking, I was like, oh, okay, and I took a little off and everything was fine. But it was really nice when you can actually figure out the difference in the price action, or you can feel it, or you can, because of repetition over and over and over again. I think patience is a tough thing. A lot of people I notice, are jumping into trades early. I see less and less of that with our crew, but I can see how, because it took me a while, and before I learned how to calm myself down and watch a little bit, I would jump in there because I think, oh my God, I haven't traded. I'm not working. I'm not making any money. And that would really tear apart my account, because I would start forcing things. and it's never in the market. And these markets, they change. They're supposed to change because order flow and agendas change. So you have to adapt to it. You can't, because I trade this market really well, I can't expect it to be there tomorrow.
Right.
I have to adapt to it, and that's a hard thing to do.
It absolutely is.
And
Yeah. I mean,
I'm still working on it every day.
for sure. Yeah. It's ever evolving, especially for me. Like and I'm still learning. I'm still new, still evolving and developing my strategy. But I like to usually I'm a very anxious trader, so I like to be quick.
Yeah.
Right now, it's really forcing me to, which is a good thing as well, because I don't want to just have a fixed strategy. I want to be able to be adaptable, and so this is really, helping me and teaching me to see the trade through longer. Which could be a good thing. And yeah, it's funny. It's funny what you mentioned about Dalton. I just wanted to say real quick, like hearing Dalton like calmed you down. That's how I feel sometimes when you're talking and like you concur like with my thought process in the trade that I'm in. I'm like, okay, good.
Oh,
So
that's
it's
funny.
like a sigh of relief.
Oh,
But
that's
then in
funny.
converse, when you say the opposite, I'm like, oh damn, flatten.
Well, I'm not always right. That's for sure.
Well, you're more right than me. But
Oh,
but
man.
anyway. So moving on, the
Yeah.
Fed Chairman Powell spoke to Congress this week, stated interest rates are unlikely to change as long as growth continues. He believes this economic growth is sustainable. What do you think?
Well, hard to disagree with the chairman of the Fed. He's got a lot more letters behind his name than I do. That's for sure. I really, I don't get too into the nitty gritty of the Fed and their statements and things like that.
Mm-hmm.
Because I am not an economics major, and I have to honestly admit that my level of knowledge of those things are not as good as they should be. So I let the market tell me what
Yeah,
I
exactly.
really rely on market generated information, and the market liked it. They liked it, and we got a gap, we got a change of thinking, and they're
Mm-hmm.
accepting higher price.
Mm-hmm. Exactly. Yeah, and I even saw on CNBC, Paul Tudor Jones was on, the billionaire and investor. He said that we've got an explosive combination, of monetary and fiscal policy right now, and he thinks this combination can continue to propel the market further, which I thought was interesting. And on Monday, we're going to be having a guy who traded alongside him, Damon Pavlato. So that's exciting.
Yeah, I am really pumped for that because he's an ex-floor trader, and he traded with Paul Tudor Jones. He traded alongside Monroe Trout,
Yeah.
And he always obviously having his wife Linda on the podcast before it was just amazing.
Yeah.
So just really psyched to have Damon on the show, and also he's an ex-floor trader, and I was trained by those guys when I was coming off the floor, so I always get along well with floor traders. I miss being around that
Yeah,
people who did who were on the floor.
for
So
sure.
they're always good fun.
Yeah. That definitely seem they're more often than not funny characters. And I hear this guy has stories that rival yours, so
Oh,
it
I'm
should
sure he
be
does. I'm
it should
sure
be
he does.
entertaining.
I'm sure he does.
All
I
right,
can't wait to meet him. Yeah.
for sure. Yeah. Moving on, SEC proposes to modernize the advertising and cash solicitation rules for investment advisors. When they say modernizing, yeah, what do they mean?
Well, I think they're going to start allowing brokerage firms to use celebrities to endorse the firms.
No,
So
no.
next thing you know, you'll see Shaq going, "Hey, Morgan Stanley, get on the bid. It's
Mhm.
a career builder." Um, you know, uh, Shout out to Uncle Harry, you dirty dog. But I think that's what they want. You gotta remember they shut down so much retail in this market with ETFs and people buying, through money managers and things like that. So, they need to sell. When you're lugging $300 billion worth of Apple stock, one of these days you will want to sell it, and you have to develop a market to sell it into. So, fractional shares, micro futures, zero commissions. I heard, Chuck, like we like to call Charles Schwab, is going zero commission. So they want the retail back into the market.
Hmm.
This is It's interesting. I looked at Apple and from a guy who used to manipulate, and I look at stuff where you have 4 billion shares in the floating supply of Apple and, 24 million shares trade a day, less than 1% of the float.
Wow.
That's not liquidity to me. I know it's
Right.
liquid, but it's just kind of scary when you have, 5 people owning $300 billion worth of stocks, or 5 corporations. These big money managers, that's a lot. And now you know why, these companies are buying back stock, because I'm sure, um, having someone like BlackRock or Fidelity or Vanguard, when they own your paper, those guys probably make the mob look like night choir boys, right? I mean, that's some serious,
Yeah.
those are some seriously large shareholders, and you will do what they tell you to do. And I know that because I've sat at a table with the president of a public company and its largest majority shareholder. And they want things done their way, right? So once again, agenda.
Hmm.
Right?
Yeah. Wow. It's crazy. Five quote unquote corporations. That's
Well, firms, right?
firms. Yeah.
I call them masters of the universe, and
Yeah.
you know, they shout out to Larry Fink, like you like to say. I
Yeah.
mean, anybody who can build a corporation, a money management firm like that, wow, it's just amazing.
Yeah.
To think that these firms are so large.
Hmm.
So yeah, it's going to be interesting.
Hmm. All right. So Jay, next week, what should we be looking for?
Oh boy. Well, I mean, I don't know. I wish I knew. This market just, we have to find a seller. You know, right now we're searching in the desert looking for a seller. Someone come out of a position.
Hmm.
And until people start coming out of some positions, I don't know where that price is going to be.
Hmm.
I
Hmm.
have to keep recalculating my levels every week.
No, I know it's crazy.
Excuse me.
Any what type of scenarios could you see unfolding?
Well, I mean, there's up, down, and balance, right? I mean, that's all we've got,
Yes.
right? And if I could call one of those, I'd be sitting in in Saint Bart's with the Grey Poupon crowd,
Yeah.
um,
Wouldn't that be nice?
on my Perini Navi sailboat. But
Ah,
unfortunately, I have to wait till the market tells me, and one day does not make a market.
yeah.
And we basically have to get to a point where my buddy Paul's favorite saying, "I'm not paying that," comes into play.
Hmm.
And until we hear the market going, people going, "I'm not paying that," or "I ain't paying that,"
Hmm.
then this circus will continue.
Yep.
You know, and yeah, that's all I can say. I just have to keep waiting for the market to generate more information.
Hmm. Amen. And so that concludes this episode of Confessions of a Market Maker. If you guys enjoyed the podcast, please rate and review it for us. If you're interested in learning market profile, if you're keen on trading a liquid market, if you got a small account, come join JJ and I at microefutures.com. JJ, parting words?
No, everyone have a great weekend, and stay loose and try and get some exercise. That's what I'm going to do. Get my fitness up for this coming the end of the year.
Yes,
Yeah.
absolutely. All right. And so for the man that's slower than a pregnant yak, I'm the man
Lower
that's
lower or slower? It was slower.
I said slower. Did,
Oh,
did
okay.
I
I
man, you
heard
messed it.
lower. I was like, oh,
Oh man, you
all
messed
right.
you messed up my flow. For the man
Sorry.
that's slower than a pregnant yak, I'm the man who's quicker than a teenage boy. You guys stay safe though.
Have a good weekend.
Yeah, right though there, Jay.
I swallowed my water. Oh boy.